The following is a presentation of TFNN. Live at TFNN, The Money Masters. With your hosts, Tom O'Brien and Steve Rhodes. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. We do appreciate you being out here with us. Dow right now is down 20. Nasdaq's off 13. S&Ps are up 4.5. We get gold up 1170. Silver's down 15. Let's see. Oil's up 35. Bonds are flat. King dollar's up 47, giving the market little conniptions.
Yes.
I mean, it's pretty amazing, you know. And what you have here, folks, is that, you know, there's no volume on the dollar index right now. So what you're going to see, I suspect, is that you're going to see a little failure up here, meaning on the dollar index. And that will give the market breathing room. You know, let's see. Let me pull this back just a bit. Come on. Where's that currency? There it is. So, yeah, you get 6,000 contracts. That ain't even close.
Yeah.
So the bottom line is that, you know,
I'll tell you though, the way the euro is trading is a trip.
Yes, it is.
I mean,
yeah.
You know, it is. You know, it's trading almost back to where it opened yesterday. It
right.
Almost got right back to that.
Right.
To that spot.
Right.
And so, God, they just don't want to hold euros.
No, that's right.
They just don't want to hold euros. Mm-hmm. Now, when you mentioned that they were going to come out and try to fund the European Financial Stability
Fund.
And
I think they funded it this morning.
They did.
Yeah,
okay.
I think they did. Let me see. Bank. We'll hunt that, but I believe on the way in, I think they funded it this
that'd
morning.
be really interesting to kind of follow up on that story and to watch how the actual euro behaved.
But it's cheap money, meaning that it's not enough money.
Oh, you know what I mean? It's
not even close.
Yeah,
it's not even close. But
hey, to get something started though,
right? No, absolutely.
You should kind of.
Well, what did happen this morning? The biggest thing over here this morning was that Germany did push those bonds out at cheap money.
Yeah.
Now, the cover rate was only 1.3, but the bottom line is that remember the last time they pushed out in euros?
Yes.
It didn't fly.
That's right.
So that flew today, you know. So that, you know, the way this thing is set up, like if we look at the SPY right now, the SPY, what you have is that yesterday they're all little ABCs up.
Yes.
You took it out with volume.
Yes.
Now, the SPY held. It held the 127.18.
Yeah.
And it's still holding it now. That's just saying it's going to be right back up there.
Right.
Which is really wild.
Which you know, the DAX is actually saying the same thing. If you take a look at the DAX, all it's done is gotten down to the bottom of that gap from yesterday.
Right.
You know, still holding.
Right.
You know, so you'd expect to see some real weakness there. That should give us a sign, if you will.
Yeah. Well, you know what? You come into Friday. Well, this just cracks me up, man. The whole thing cracks me up. Let me see the Dow Industrials. The reason being
is that the volume.
Well, when you have this many coordinating around the world, you know what I mean?
Yeah, for sure.
It's really cool. Well, the sickest part is that, you know, it wants to go higher, but I know it wants to go lower. So this is the deviance in the marketplace.
Yeah.
Okay.
Yeah.
So on a short-term basis, I mean, imagine if someone was just tuning in, they'd think I would be the biggest bull in the world.
Right.
You know.
Right.
You know, but the reality is that, hey, you know, on a small-term basis, bottom line, you know, look at the Dow. You know, you get over that. Let's see, the 12,284.
Yes.
You're still way over it.
Right.
You're backing,
right.
And what you're doing here today, folks, is you're backing down with lighter volume. See, it's 1.6 billion. That will be the benchmark. Let me see this. Well, that's a benchmark on the Nasdaq, not in the S&Ps.
Right.
But look at see this. We're backing down. We get 118 million right now, which it should be more than that. But it's going to be a back down on lighter volume, which is basically building cars for higher price.
Yeah. Well,
pretty wild.
You know, and in that case, then you would be expecting a bounce in the euro.
Yes.
You know.
Yes.
You know, exactly.
Yeah.
And on the 30, you know, now, folks, when I say it's backed off quite a bit, it's still behaving. You know, I covered this in the opening show this morning at 9 o'clock. I was showing the 30-minute chart on the euro, and it's still behaving the way that it should. And what I mean by that is that, you know, it created a Gartley sell pattern.
Right.
Really did that at about 2:30 yesterday afternoon. Made an A to B equals C to D.
Okay.
Was a 618 retracement coming back to the swing point here. at 6 in the morning on the 22nd. But also, what's so cool about it is while it was making that pattern, it was also completing a move of a move.
Yes.
It's so nice when you have multiple patterns that are
seriously, man.
Coming together at the same time.
Right.
And then, folks, what it's supposed to do, it's supposed to back off to at least the 0.618 area of the entire now move up, meaning from the A point to the D point. And, and that's really where it's trading at right now. It came through it just a bit, bounced up, and now if this area fails, you'll see some more pressure put on the U.S. markets. You'll see it come down and test this 0.786 area, and where you would expect it to bounce. Now, there's no other pattern on the 30-minute chart that it's setting up. So it's not like there's now a Gartley buy pattern.
No, I'm with you.
That's setting up. It's really been almost not a complete straight pullback, if you will, but enough of one.
And you know what's cool? So watch this, folks. When we talking, so we were just talking price there, right?
Yes.
Now watch you to talk energy. Now, so you got to remember something. The markets are all energy, right?
Yes.
What I like about how this is setting up, and this is how basically pretty good bottoms come in too, which is going to be interesting here, right? So watch. When we came off the highs, October 27th, you're at 142. The thing thunders down.
Oh, it does.
Okay. Now, the real important days near these lows would be the 13th of December.
Yeah.
And then come all the way over to the 28th of December.
That's right. Yes.
29th of December.
That's
now
right.
Watch this. So what you needed, folks, is this. You needed huge energy on the 13th, right? Bow, 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 coming down.
For sure.
Right?
Absolutely.
You do a bounce. You get huge energy again coming down. Sell.
And huge energy coming down, completing that total move of a move, too.
That's right. Huge energy again, and it rejects it.
That's right.
Okay?
Yeah, that's
now,
right.
the top of that rejection is 129.58.
Yeah.
Okay? You bounced yesterday, huge energy again. It's going to take so much energy to bust this low out.
Absolutely.
Because of that structure. Now, if it busts it out, forget it, man. It's going to be like March of 2008.
Well, there's no question that truly when you get down to the low of the bar from December 29th, that price there being around the 126.57 area, that low is really important.
Right.
Because if that low does give way, and particularly in my opinion, when I take a look at I like to look at Japanese candlesticks. I especially like them when they're coming together at pattern areas, completion of a pattern.
Right.
So what it does is it gives you just another signal, one more signal, if you will, that is out there. And that was on a daily chart. That was a hammer candle. And then yesterday you had this nice bullish engulfing. So you get two pretty good moves off of the bottom, Japanese candlestick-wise. Those things do fail. It's telling you lower prices are coming, and then all you have to really do is just change over to the weekly chart. And the weekly and monthly charts are signaling that the price move on the dollar is lower. There's no question, longer term.
You mean on the yen?
On the euro.
On the euro. Yeah, because you got 124.50 there.
That's right.
B equals C to D, right?
That's right, yeah. Right. And so longer term on the yen, that's where it wants to travel to. Doesn't mean that it has to do it right now, but if that low does get taken out, there's nothing really left to stop it. It's already done its move, and it has no choice but to get down to that 124.50.
Now, folks, what's so cool about this, right? And this is something to understand in markets, is that everything you're hearing here, is not lagging. It's all leading indicators.
Oh, absolutely, no question.
And leading indicators, folks, are a whole different animal. Okay? And the reason they're a different animal is that you can understand how to set up trades coming into them, which is really cool, man.
It is. I remember, as I was taking myself through the process of understanding technical analysis.
Right.
First, what was so cool was that you were opening up my eyes, everybody else's eyes, to really leading indicators, swing points, understanding price and volume, taking a look at the energy, if you will, on the way up and on the way back down.
Right.
And that was easy for me to understand coming from an analytical background, because of supply and demand and being in so many retail
and having your stores,
businesses.
Absolutely, man.
Look, folks, when I can tell you that if you want to go visit a Disney park or you don't like going to the parks because of lines, go there today. go there this week or next week because
Okay.
you can shoot cannons through those places.
Okay.
Because
After the
it's
holiday,
a slow,
right? Yeah.
especially after the Thanksgiving, Christmas, New Year's.
Because everyone goes then.
Yeah. And now it used to be a little bit different when you had a real strong euro.
Okay.
So during the days of
Right.
the 2008 time period where it was where there was the pound, where it's 2 for 1,
Sure.
it was like the U.S. being on sale.
Okay.
And so then from a retail standpoint, I didn't have to worry about dropping prices on anything. In fact, if anything, we considered, being able to make sure that our folks were really concentrated on their stand of selling them on the mere fact, no, I don't say selling them, just making them aware that, they were really getting 2 for 1 on their money.
Okay.
Most of them already knew that,
Yes.
okay, if you will,
But if
when
they-
they did the conversion.
Right. Wow.
And so but that was in the heyday.
Right.
We're not in the heyday today, if
Right.
you will. And so, this is where, from a supply and demand standpoint, knowing that there's nobody in the store,
Right.
you drop your prices. You give them more value. You do something,
Yes.
to try to, keep the business, the cash flow floating through there. So that's so cool about the leading indicators of swing point supply and demand that you teach in art, the art of timing the trade.
Well, and it's so cool because, folks, when you really manage your money, right? Let me tell you what happened when I was Christmas shopping.
Yeah.
I'm Christmas shopping, right? And I'm always spending plenty of money. It hasn't, but I want a value for the money.
Yeah, of course,
Okay?
of course.
So, I'm going. There's certain things that I know that like in the Apple Store, you're not going to get a deal coming off, and that's no big deal.
That's
I
right,
wanted
that's
so
right.
many things for so many people, and that was it.
Yeah.
But what ended up happening was this: is that I was going into buy some athletic gear, right?
Yeah.
And I go in the store, and there's absolutely not one deal, and I start laughing. I said, because the expense ratio is huge.
Yes.
I'm saying to myself,
absolutely.
well, this makes no sense. And this is where, this is almost like setting up a trade. That if you already done your homework, and what I mean by that is that, when you get, what happens, folks, if you're younger, this is harder to do, but as you start getting up, you can always make sure that you have plenty of stuff that you use a lot, right?
Yes.
So,
that's right,
I
that's
still
right.
have plenty of stuff
That's
that I had.
Oh.
But what I wanted
Exactly.
is that I wanted a decent deal.
Yeah.
You know what I mean? Saying, okay, in 3 or 4 more months, I'm going to need more stuff or whatever.
Right.
And there wasn't one. And I grabbed the manager. I says, you got something wrong with you. I says, I walked in here.
Yeah.
I says, but there's not one thing that's on sale. I says, well, I'm not going to buy it. I'm not going to pay $80 for a shirt.
Yeah, right.
It's not going to
right,
happen.
Right,
Okay?
right.
If you want to basically give a deal, well, you know what? You're going to get a cash flow.
Yeah.
And it was amazing. And it's the same thing, though. I mean, because,
Sure. Yeah, and that's what's cool about understanding. Take a look at this as the breathing patterns. These Gartley patterns. These AB equals CD. Just one more, advanced indicator, leading indicator, which is cool. Now, what was cool that I did this morning, and just kind of intuitively just came out, and I was talking about the importance of how much certainty you can have in the marketplace here.
Yeah.
And because if you put your stops in place as well as your exits, the completion of the pattern.
That's right.
And the analogy was, would you run your business where you delivered your product and service where you've got a receivable and not collect on it?
Right.
You'd be out of business.
Oh, yeah.
Well, in trading, your receivable comes at the completion of the pattern.
Exactly.
And you got to collect,
Well,
you got to
that's
take your money.
cool. Yeah,
So it was pretty, I was kind of, hadn't thought about it till I was
No,
really, it was
exactly.
pretty cool. And that's what you got to do in this market, in any market.
Big time.
Yeah.
Steve Rhodes, Tom O'Brien, you stay right there because when we come back, folks, what we have setting up here, it's just really cool. We actually got a butterfly setting up with a Gartley, the bigger Gartley, which is pretty cool. We're going to be coming right back.
I love it.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while actually reducing your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns, making missed opportunities a thing of the past. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
In 1929, Joe Kennedy had $4 million. By 1932, he grew it into $180 million. All this during the Great Depression. The good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. How would you like the strategies that Kennedys and others use that are bulletproof against the turmoil of our economy in these fast-changing times? For the last quarter of a century, I've studied and used the secrets used by millionaires and billionaires. These are bulletproof strategies that will astonish you. I'd love to introduce you to these concepts because they will absolutely change your life. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien and host of The Trader's Edge, both seen daily at TFNN.com. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then send me an email at steve@tfnn.com and I'll send you this free report, Pathways to Wealth. That's steve@tfnn.com, giving you Pathways to Wealth.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We get the Dow down 31. NASDAQ off 14. S&Ps are off 6. Okay, so, you know, it's going to be wild here. So if we look at, I got the cash S&P up here right now. Well, actually, let me put the SPY up. So if we put the SPY up,
yeah,
you know, what you had out here yesterday, folks, which is just amazing, there's no doubt about it, is that, you know, we took out the swing points on many of the indices and the sectors of December 5th and 6th.
Absolutely.
And we took them out with volume.
Absolutely.
So those are small ABC structures on the way up.
Yes.
Now, what's so cool is when I was looking at this, I said, you know what, man? If we use the 27th, which is our benchmark, right?
Yeah.
What is the most deviant thing it can do?
Oh, no, for sure. Get up over it.
Go over
Absolutely.
it, right?
That's
so
right.
Perfect.
That's right. No question.
Let's go over it. You know, we have 393 million shares there.
Yeah.
Let's make a butterfly.
Yeah.
Now, what happens, right?
Yes.
So we get a butterfly on the small one.
Right.
But you know what? That's going to be a Gartley on the 1350.
Yeah, off of the May highs or what have you.
Right. Which would be really
which is really great when you can have using two leading indicator patterns, you know, that complete. In fact, I did that last night. I had one of my clients who trades currencies. He's in Australia.
Okay.
And sent me an email taking a look at I think it was the yen, euro, or one of the currency pairs.
Right.
But I wasn't near my computer at the time.
Okay.
But I could see on my phone.
You wasn't near your computer.
Yeah, believe it or not. Yeah. I was trying to get some dinner in. But what I could see on my screen was, you know, I looked at what he was looking at, and I could see visually, and I gave him I said, you know, go take a look at the smaller Gartley that you have there and turn that into a butterfly. In fact, I might even have it on my screen now. Okay, and then I think on the larger one, I think you've got a Gartley. I said I can't see his screen. I know he didn't give me enough of a shot.
Right.
But if you go back further to the left in time, I think you've got both a butterfly and a Gartley coming together, perhaps right around the same price point, which is what you're showing here to folks. And that's, you know, it doesn't mean that pattern is going to complete, but if it does complete, then you're ready to pull the trigger.
That's right. And what Steve's saying, folks,
that's what's so key.
It's a much higher probability.
That's right.
And it's so neat. Isn't it so neat just watching them? And what happens, folks, is that you'll keep your hands in your pocket until it completes.
Yeah.
You know, it's a patience deal. It's like, okay, you know, and if I've learned anything, you know, is that, you know what, these markets, with a little patience in 2 or 3 days, okay, can absolutely get higher. Oh, I got a new trick.
Absolutely.
I got a new trick.
Absolutely.
I got a new trick.
I love it.
Now, when I say a trick, this one here, folks, is actually a trick is a funny word, but let me explain something to you. This is pretty wild. Now, the first time I did this by mistake.
Yeah.
Okay. But check this out. So, what happens, folks, in whether it's the currency markets, well, the currency and indices in the futures.
Yes.
Okay.
Yes.
So what ends up happening is that you basically are trading the front month, which is it's every 3 months, but you're trading the front month,
right.
Well, what happened about 3 weeks ago, right? I looked at it and I says, you know what, man? I was looking at the correlation between the euro and the dollar.
Yeah.
Right. And I says, you know what I'm going to do? I'm trading off the front month.
Yes.
But I'm going to put my order in off the following.
Oh, okay.
Okay.
That's cool.
Now check out what happens.
That's cool.
This is a trick. So you got to remember something. What happens in those future markets anyway? They're spiking all the time.
Yes.
Okay. They spike up. They spike down. So the first time that I did it, so I'll give you a direct correlation.
They're spiking because you're typically taking a look at 10-minute charts when you're trading.
That's right. Yes.
Okay. On the daily chart, you're not going to get those.
So let me just give you a correlation. So like right now, you know, on the forward month, it's 129.27, right?
Yes.
Going out 3 months, it's probably 129.35, 38, somewhere around there, right?
Yeah.
So what happens is that when you're actually trying to get in or get out, is that I was using.
That's pretty cool, I know.
Oh, it's a trip.
Yeah.
And so I was watching, and, you know, the first couple times I didn't get an execution for, 2 or 3 hours.
Yeah.
And then all of a sudden, boom, spikes down, I get it, and we go.
Yeah.
And so you'll hear more about this, folks, because I start logging it, and I got about 7 of them now. And I'm going to see, what I want to see is the correlation when they see it hanging out there, because that's what it really is doing.
Yes.
See, what's happening, folks, is that's not as liquid, so it's just hanging there.
Right,
okay.
Right.
But then someone gets greedy. It's I'll take that.
That's right. That's right.
You know what I mean?
Yeah, for sure.
So you know, and now, folks, that's only on the way in. On the way out, I'm going flat out.
That's right.
You know, the business, collect the money.
Right.
You know what I mean?
Exactly.
It's on the way in, because what I'm trying to do on the way in, whether I'm buying or selling, I'm trying to get a better execution, and what I'm trying to do is have the other person on the other side be not patient and be greedy.
That's right. Yeah. You take advantage of.
Yeah. I'm just sitting there saying, hey, you know, you want a deal?
That's right. Exactly.
You know, I want a deal. Steve Rhodes, Tom O'Brien. You stay right there, folks. We're coming right back. We have the Dow down 39, Nasdaq off 16, S&P's off 6.5. We're going to be right back.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2 week free test drive right here, right now.
Did you know that the price of gold is up over 24% this year, while the GDX, the Market Vectors Gold Miners ETF, is actually down 1.4% this year? Not all gold stocks are created equal, and not all gold stocks move with the price of gold. In October, Tom O'Brien recommended a buy of FCX in his gold report, and only 6 trading days later advised his clients to close the position, profiting almost 22% in this one trade. During the same 6 trading days, the price of gold was barely up 5%. Tom O'Brien's weekly newsletter, The Gold Report, gives investors the inside edge they need to profit in this gold market. Each Monday morning, Tom issues a gold market update at around 9:30 a.m., then issues a full report each Tuesday afternoon. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report. To order your gold report with a free 30-day trial subscription, log on to tfnn.com today or call 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In 1929, Joe Kennedy had $4 million. By 1932, he grew it into $180 million. All this during the Great Depression. The good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. How would you like the strategies that Kennedy's and others use that are bulletproof against the turmoil of our economy in these fast-changing times? For the last quarter of a century, I've studied and used the secrets used by millionaires and billionaires. These are bulletproof strategies that will astonish you. I'd love to introduce you to these concepts because they will absolutely change your life. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien and host of The Trader's Edge, both seen daily at TFNN.com. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then send me an email at steve@tfnn.com and I'll send you this free report, Pathways to Wealth. That's steve@tfnn.com, giving you Pathways to Wealth.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Let's see. We get eBay down $1.21. You get Oracle down 16. Acme Packet. You talk about getting smoked. Here, this equity here, folks. If you want to see something that's just amazing, this is APKT. Now, if we bring this back, you're going to see something that's an absolute disaster.
What is this? A grocery? What is this?
No, it's it's controllers, right? Yeah, controllers for internet providers. Okay, so it's hardware, prop software. Bottom line is that
how do they come up with a name like that when you have the Roadrunner?
I know
that's got that Acme, and it pulls the
big time. Big time. now just look at this. Okay, so you got this had already projected a monster ABC down.
Yeah,
and it was a monster too. 85 is your A point, 40 is your B, so you get 45 bucks.
The B point.
$45 off 52 is $7.
Yeah,
right. Blows it away, and it's going to blow it away again. It's just amazing, man. You see these equities get destroyed, and this one's absolutely one that is done.
Yes.
Toasted and roasted. Let's get a Mark in Massachusetts. Hey, Mark, what's going on, brother?
Not much. Tommy, how are you? Happy New Year to the two of you.
And you also, man. Let's make it a great one.
That's right. Have profitable days, trading all around.
That's right.
I have a question on the market in general. It appears that the financials, which I guess had a pretty good day yesterday, Bank of America had a very good day yesterday. It appears that the financials is pulling down the market. And I'm looking at my Thinkorswim here, and Citibank is down 58. Bank of America is down 14. Bank of New York Mellon is down 37. JP Morgan is only down 22, and Amex is also down. Is my observation on the market correct that the financials are pulling down the market, or am I looking at too much of micro?
Well, what are you trying to do? I mean, the financials want to go higher. They're all pulling back with lighter volume. That's all the market's doing right now.
And I would say the currency market from the financial side is what's pulling because it's that correlation with King dollar and the euro.
Yeah.
That's got more to do, in my opinion. Because that's a correlation we can put up on a screen and watch it go tick for tick.
Yeah. Don't go short the financials. Do not go short the financials, man. They want to go higher.
Okay, well, that was my question. I said, is this? Would you be neutral on the financials, not play it, or would you maybe buy some of these on a short-term?
No, we were just talking about.
Before you even came on the air, that's what we were looking at as a trade.
No, we were talking. I listen to this, folks. This is hilarious. Before the last break, I'm saying to Steve, this is wicked, man. I know this thing wants to go higher. But I don't want to buy it because I think the risk parameter is a little too much, right? And then the way that the euro is coming down, I said, I like what's happening now. Do you know what I mean? It was getting so low, and the S&Ps are pulling back with so much lighter volume that then I turned around at the last break and said, I don't know, man. This is pretty close because, all these sectors got to a higher high, have the juice, and what's real possible is that it may happen today. If these babies can come back and just fill that gap from yesterday, then be all over them, man. All over them.
You know, Mark, one of the things that I when I was taking a look at putting my newsletter together for my clients last night was I was going to take a look at all the sectors inside the S&P, but the volumes were so huge that I thought I had a problem. I was sending David emails, having him check his stuff out, and so I didn't even talk about it this morning because I wanted to, sit down with Tom and take a look at what he had on the Bloomberg versus what I have, and the volumes yesterday are real.
They're real, yeah. Those sectors, they're real. They had juice underneath them. They took the B out with volume, And
I've got all 9 sectors on my screen right now. If they switch to that real quickly, you'll see yesterday, big volume on the financials. You had 167 million shares come in on the technology sector, the XLK. You had 26 million shares. I mean, big volume when you take a look at what we've been doing for the last couple of weeks.
Yeah.
Huge.
Well, Bank of America yesterday had a very good day. I remember when Tommy was reading through the numbers yesterday, he was kind of surprised at how much it was. It's just the tone in Tom's voice.
Yeah.
But okay, that was my question for the day. Have a great, profitable day trading, guys, and talk to you sometime soon.
You too.
Awesome, man. Have a great one. Have a safe one. Steve Rhodes, Tom O'Brien, you stay right there, folks. We're coming right back.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. And don't forget, folks, Steve kicks off TFNN each and every trading day, 9 a.m. Eastern Time. You can bring him everywhere with you. Tiger TV,
yes.
You can talk about iPads, iPhones, Android devices, whole ball of wax. When you go to TFNN, just on the right-hand side, you'll see the device. You just hit it right there, pops right up. And what we do, of course, is that we go 24 hours a day, 7 days a week. So bottom line is that it's all out there.
Yeah, so cool. And such a great lineup, we got Basil in the on-deck circle, Larry following him.
Right.
And you got David warming things up for you at 4 to 6.
That's right.
I love Wednesday. I love each day around here.
It's a beautiful thing, man.
Yeah.
I'm telling you, time's always flying. I'm telling you.
Yeah.
Next, we're talking about time flying. Next Wednesday, folks, a week from today, I'm going to be doing a webinar on basically how you basically look at bottoms, look at tops. The bottoms in particular get really interesting because the fear that comes in the marketplace is extraordinary. And what the webinar is going to be on, it's going to be on how you use a tick, how you use a trend. And the bottom line, I only use these at wicked extremes.
Right.
But
such a cool tool.
Oh, it's huge.
Which is
huge.
that tick index,
it's huge.
If you will, because folks, if you look, whoever your model is from an investing standpoint, if it's Tom, perfect. If it's Warren Buffett, perfect. Both those guys, both of them are buying when people are fearful.
Right.
That's right. What, you're buying when they're crying.
Right.
And so that's what's so cool about the tick index.
Right.
Is how you would actually take a look at using that to be able to get into a trade when your instinct might be, there's no way in the heck I'm going to buy
That's
it.
Right.
But the reality is, it gives you that great signal. And when those things come in, what I've noticed is they're explosive moves.
Yeah, they are.
Right? I mean, they're explosive. You go back and take a look at October 4th.
Right.
If you look at October 4th, when you got the signals on the tick index, it was explosive that day.
No, they are. And it doesn't mean you won't be nervous, folks.
Oh, you will.
No, it doesn't mean that.
Absolutely you will.
But the bottom line is that once you really understand how these come in, you can maybe be off a day or 2, 3 days, but that's it. And when they come in, man, and when it happens, like I remember in...
Well, you weren't off on October 4th. I remember that.
No. Listen, I can go back to 94. I can go back to 98. I can go back to a lot of different ones. And it's really interesting because even the one in 2003, I remember saying to Angie, I said, this is here, man. This is in right now.
Yeah.
And what ends up happening, which is really wild, is that what happens, which is unfortunate, is that all the bulls, that the people that just are always bullish, unfortunately, they're so scared that it's like, oh my God, holy, and that's just how bottoms come in. Bottoms come in, and when everyone's out,
Yeah.
And everyone at the very end, which is just amazing, is this. At the very end, folks, what happens is that everyone sells the exact same stocks.
Right.
The exact same stocks. Now, how the heck does that work? There's 3,500 stocks in the NYSE.
Absolutely.
Well, you know what ends up happening?
And you see 1,800 of them or what have you, boom, at the exact same minute.
Boom.
Yeah.
Hit, and, you know, and that's why you know we're all one.
Yeah.
Somehow we're all wired into one.
Well,
and,
it's just those patterns that are so ingrained in us. And as I was even, sharing with folks this morning, and I'm going to try to do, as long as the markets are relatively stable and the futures markets around the world in the morning, is using that first segment to just simply be able to help people from a roadmap standpoint, get from where they're at to where it is they want to go.
Right.
But it really all is about patterns. We're talking about we're talking about advanced patterns. Leading indicator patterns. Well, there's a beautiful one that is a real leading indicator that it's right there in the throes. I mean, you know what you're looking for. So it's easy that once you've taught people how to do that, to be able to put that up on their screen. Right. And for them to watch what's going on.
No, big time.
Really, really cool.
And so it's next Wednesday, folks. There's an early bird special out there. If you do get my newsletter, it's free with my newsletter. So if you already subscribe, don't worry about it. You're gonna get the whole deal. If you're not, you can test drive the newsletter. Check it out. Get a great webinar. That's next. If either or, it's an indicator you absolutely want to wrap your head around. And it's an indicator I can tell you flat out, people will say to you, how the heck did you do that?
Yeah.
It is. It's one of those weird things. You know what I mean?
Yeah.
It really is.
Now, another indicator, if you will, I've got up on my screen right here, is the euro, the 30-minute euro. And, what it's challenging right now is the 0.786 area, right? In the, it got down so far in this 30-minute session, doesn't close out for another 14 minutes, but got down to a low 129, 8 and change or what have you. And you're going to want to watch, see what kind of candle forms here, because this would be the area here where if it holds the 0.786 area and you were looking for, when I say a day trade, I mean it might last more than today and tomorrow or what have you. But, like Mark was calling and asking about, one of the sectors inside the S&P, the XLF. Here's where you really want to be able to correlate two different things at the same time. You want to understand what's going on inside the euro because that's the king dollar basket, if you will. And if that 0.786 area holds, you will see, a bounce from here. If this lets loose, it's going to go back and attack those bottoms right in that 125 area. Has no choice. It's got to do it.
So when is the next date that we should be paying attention to?
Next Monday, the full moon.
Next Monday.
Yeah, that's...
Today's Thursday? What day's Thursday?
Today's Wednesday. I know it's hard for us to figure out what days.
Right.
We're already in the middle of the week. Yeah.
Okay.
Yeah. So here's the here's the other possibility, right? To take a look at the bullish and the bearish, but that's why you want to take a look and understand the correlations going on in the marketplace. What we had yesterday was on January 1st, so that was Sunday, and then on January 2nd, we had two lunar cycles.
Okay.
They're shorter-term fuses, but they've been working really well, and that was with the moon at apogee when it's furthest from us during this lunar cycle, and a first-quarter moon. And so what you would expect that the market would be making either a high or low. Yesterday, it goes and it gaps up and it makes a high. Now, with the market trading down, what you would expect, what you would like to see, quite frankly, is you would like to see the market move. I would prefer to see the market move down into a full moon.
Okay.
Because when the markets have been moving down into full moons, they have been so accurate.
Oh, cool.
So dead balls accurate.
Okay.
And what happens typically on that full moon date, it's nice that finally we're falling on a weekday versus a weekend day. Because on a weekend day, you don't know whether it's the day before, a Friday or a Monday that you should take the trade.
Okay.
But what I found is that if you use the position size, and if you use average true ranges, it makes it a little bit easier, to deal with the trade. But in this case here, one other possibility, if the euro fails, then the market will move down into that full moon cycle.
And don't forget, folks, you can come over to our website at TFNN, right in the carousel. You get Steve's position sizing calculator. You can test drive that 30 days, absolutely free.
Absolutely.
Steve Rhodes, Tom O'Brien, all the tigers and tigresses growling and prowling. We're coming right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Hi folks, Steve Rhodes here. Tom O'Brien and I need your help. Together, let's change the cash for gold industry once and for all. Now is the time to unleash the game changer, and that's you folks. We've all seen the power of viral marketing. It's overthrown dictators, and now it's time to rid the thieves in this cash for gold industry. Together, we can change this industry in a heartbeat. You know about our industry-leading payouts, our free tools, our video valuation, and the education that we provide to help folks value their jewelry. Tom and I are experts and the industry's most trusted team. Please join us now by spreading the word to your entire email list. We'll pay you 5% of the total payout, which on average would be $50 per transaction. 100 transactions is $5,000 in your pocket. We'd rather put our marketing dollars in your pocket and more money in your referrals pocket. Go to TigerMetalExchange.com and click on the Become a Partner button to join our team. Let's start a revolution, folks. We can't do it without you. TigerMetalExchange.com, the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien, and of course, Tiger Metal Exchange, folks. Don't forget, number one, if you have...
I'll tell you, we had a great Christmas, a great end of year.
Yes.
Now, a lot of folks, who are scaling in from a coin standpoint, from a physical standpoint.
Right.
Took advantage of the prices as prices pulled back.
Cool.
Platinum, silver.
Right.
We think we just delivered the rest of everything, or got it out in the shipments yesterday.
Okay.
From what came in towards the end of the year, and also have got so many folks that are turning their their jewelry into cash and putting that to work. So that's a cool thing, or just simply paying off bills. And then we've had so many folks sign up for the partner program. We've got a couple of Tigers coming by tomorrow afternoon. that are really taking advantage of that. And folks, that's a program where, there's nothing that moves faster than the speed of trust. And, for those folks that have done business with us, they know just how simple and easy it is by being able to send their items into us.
Right.
And if you don't have items to send in us, that's cool. But you have, either business relationships or family relationships. And, if you just simply come over to our website, you sign up for the partner program, send emails out to your friends. We have a way so that we can automatically track things, and you'll earn 5% off of the great payout that we already give them. So it's putting money in everybody's pocket because,
it's 5% of the gross,
5% of the gross, yeah.
Right.
5% of the gross of what it is that we pay them, and which is on average is like $1,000.
Right.
It's a little bit higher, for our client base, if you will. And, it's an easy $50 just to simply and the reality is that, and the reason why we want you to do it is because we want you to protect your friends and family. The reality is we know what this business is all about.
Right.
And we know how much people are being taken advantage of. When I walk through a mall and I see the gold kiosks in the stores or the signs around there, the folks are just not getting the proper value for their items. So,
and what has happened, folks, is this: the reason that they don't is that people they don't understand that how small gold can be and how much it's worth.
Yeah.
And then the second part of that is because most of this gold was bought when gold was only $300, $400, $500.
Yeah.
The people are related. I had one of my friends. This was a big transaction, right?
Yes.
And they unfortunately didn't even know that we were in the business.
Right.
Went down the street, and bottom line is that they got about $3,000 or $4,000 less.
Yeah.
Now they weren't even upset because they're coming up with the rest of the stuff. Okay.
Yeah.
But I was looking at it, and she just said to me, "Well, I had it so long ago."
Yeah.
Don't do that, folks, because you're going to be really surprised how much it blows my mind.
We've got dentists. Now, dentists, they're using precious metals, for fillings and so for bridges or what have you. And those folks typically had been sending their product back to the refinery where they were buying the metal from.
Yes.
They get, in some cases, 50% more money by sending it to us.
Right.
All these, so if you know any dentists out there, what have you, that's an easy way for you to be able to help somebody that you already know, or maybe it's somebody that you go to.
Yes.
To check us out.
And you should see. I'll never forget when you brought it into my office, that box. We had a box.
Yes.
With the dust.
Absolutely.
I think it was like. This is amazing, folks. So think about this for a second. You got to think about even, foreign countries, and you read about how people are out there collecting even dust.
Yes.
Was it 20 pounds of gold dust? 50 pounds?
It was. Yeah.
It was really cool, folks. Yeah. And it literally was dust, but it was worth a fortune.
It was.
And so it was in a big bag, and it was just pure gold.
That's right.
But it was just dust.
That's right.
That's amazing, man.
It was currency.
Yeah,
it was currencies.
That's right. That was from the lab that they dust up. Picture this: you're in a lab, you're making it. Oh my God!
Yeah,
you're talking about cleaning the floors. See that, folks? There's nothing wrong with cleaning the floors, man.
Hey, I did that for a while as a kid. Put myself through college.
I love it, man.
Toilets and floors. I could, those machines that you use.
Yeah.
I remember the first time that I used it. Bam! Right into all the cabinets.
Swing it right around. Yeah.
So pretty soon you can make it dance. You just have to learn how to control it. So.
You stay right there, folks. We got our man Basil Chapman coming up next from Newton, Mass. Then Tucson, Arizona, Larry Pesavento back here with David and myself. Have a great one. Have a safe one.
See you in the morning, folks. Have a great day.